Welcome back. So for today's video, we're going to talk about how inflation affects us in a negative way and positive ways. Inflation refers to the rate at which the general level of prices for goods and services is increasing over time. Inflation is a complex phenomenon that can have both positive and negative effects on the economy and society as a whole. In this response, we will explore how inflation can be both good and bad for various stakeholders in the economy. Positive effects of inflation. Encourages spending. Inflation can encourage consumers to spend money sooner rather than later because they fear that prices will rise in the future. This can stimulate economic growth and help to prevent deflation. Increases wages. Inflation can lead to an increase in nominal wages, which can help workers to keep up with rising prices. This can help to maintain their standard of living and increase their purchasing power. Boosts exports. Inflation can lead to a depreciation of the currency, which can make exports cheaper and more attractive to foreign buyers. This can help to increase demand for domestically produced goods and services and boost economic growth. Reduces debt. Inflation can reduce the real value of debt over time, making it easier for borrowers to repay their loans. This can help to stimulate borrowing and investment in the economy. Negative effects of inflation. Reduces purchasing power. Inflation can erode the purchasing power of consumers as prices rise faster than their incomes. This can lead to a decline in the standard of living for many people, especially those on fixed incomes. Increases costs. Inflation can increase the cost of production for businesses, which can lead to higher prices for goods and services. This can lead to reduced consumer spending and economic growth. Hurts savings. Inflation can reduce the real value of savings over time, as the purchasing power of the money declines. This can discourage saving and investment in the economy. Causes uncertainty. Inflation can create uncertainty in the economy as businesses and consumers struggle to anticipate future prices and make informed decisions. This can lead to reduced investment and economic growth. Positive effects of inflation. Promotes investment. Inflation can encourage investment in the economy as investors seek to protect their wealth from the eroding effects of inflation. This can lead to increased economic activity and job creation. Encourages innovation. Inflation can incentivize businesses to innovate and find ways to increase efficiency and reduce costs, which can help to stimulate economic growth. Reduces unemployment. Inflation can reduce unemployment by creating a more flexible labor market, where wages adjust more quickly to changes in supply and demand. This can help to reduce the natural rate of unemployment over time. Negative effects of inflation. Redistributes wealth. Inflation can lead to a redistribution of wealth from savers to borrowers, as the value of debt decreases and the value of savings declines. This can exacerbate income inequality and reduce social welfare. Reduces investment. Inflation can reduce investment in the economy, as investors become more risk-averse and prefer to hold cash or other assets that are less affected by inflation. This can lead to reduced economic growth and job creation. Increases uncertainty. Inflation can create uncertainty and instability in financial markets, as investors struggle to predict future prices and make informed decisions. This can lead to increased volatility and risk in the economy. Overall, the effects of inflation are complex and multifaceted, with both positive and negative consequences for various stakeholders in the economy. Policymakers must carefully weigh the costs and benefits of inflation when making decisions about monetary policy, and seek to strike a balance that promotes economic growth and stability while minimizing the negative effects of inflation. In conclusion, inflation can have both positive and negative effects on the economy and society. While it can encourage spending, increase wages, boost exports, and reduce debt, it can also reduce purchasing power, increase costs, hurt savings, and cause uncertainty. The overall impact of inflation depends on the specific circumstances and stakeholders involved, and policymakers must carefully balance the costs and benefits of inflation in their decision-making. If you enjoyed this video, please give it a thumbs up and consider subscribing to my channel for more content like this. Also, feel free to leave a comment below and let me know what you thought of the video. Your feedback helps me to create even better content in the future. Thanks again for watching, and I'll see you in the next one.